What's up everybody, I am Jaspreet Singh, and at a time where inflation keeps breaking new record highs, gas prices keep going higher and higher, and President Biden has come out and said that there's more pain to come at the pump. Over the last couple of years, gas prices have gone through their own roller coaster. We went from seeing gas at below $1 a gallon in 2020 to then seeing $3 a gallon in 2021 to then seeing $4 a gallon in 2022, and we're on pace to see $5 a gallon across the country. Some people have gone as far to say that we might even see $7 a gallon across the United States. Unless, of course, you're in California, because then you're already seeing $7 a gallon right now. There are some pretty obvious costs when you have high gas prices. You have to pay more money to pump your gas, you have to pay more money to go on vacation, you have to pay more money to buy your groceries. But my goal today isn't just to go over the costs of high gas prices, but I want you to understand what's going on and what's causing it. That way you can make smarter decisions with your money, because unfortunately, it doesn't look like high gas prices are going down anytime soon. Oil and gas prices are determined by supply and demand. When you have a high supply of oil and not that much demand, that's when the price of gas goes down. And that's exactly what we saw happen in 2020, because we had a bunch of oil refineries pumping oil like normal, but then the whole world shut down. So nobody was driving, nobody was flying, nobody was manufacturing anything. So we had a very low requirement for oil. That's why we saw gas prices crash, in some cases to below $1 a gallon. Now, as people and companies are living their lives again, we have a high demand for oil, but the supply of oil really hasn't been keeping up. And now, because of the war between Russia and Ukraine, we have a lower supply of oil, which is contributing to the higher oil costs. President Biden came out and he banned Russian oil along with a lot of other countries, which means we have a lower supply of oil coming into the United States. In 2021, less than 5% of the United States oil came from Russia. So if Russia isn't a major supplier of the United States oil, because we do have other suppliers of oil like Canada, then why are our gas prices going up so fast? Because oil prices are set on a global basis, and now because everybody's worried about potential supply chain disruptions in the oil market, that's been driving up the price of oil, which has been contributing to higher gas prices. Now, the reason why you see different gas prices around the country, like the reason why gas in California is so much more expensive than gas in Michigan, for example, is because one, you have to look at how far this area, this state is from a supplier of oil. The further that gasoline has to travel, the more it's going to cost. And second, every state and every region is going to have their own requirements as to how the gas needs to perform. California, for example, has very strict requirements on what type of gasoline that you can pump, which means that now if you're a gas station in California, you're going to have to pay for a more premium and a better type of gasoline, which means that ultimately the consumer is going to have to pay more for their gas, because there's less companies making the gasoline that California wants, and it's a lot more expensive to produce. When Russia initially invaded Ukraine, I was in Jamaica. Beautiful country, beautiful people, amazing food. I loved it over there. And when I was over there, somebody that stayed on the same resort as me worked in the Texas oil business. And I was talking to him about what's going on. I wanted to get his thoughts about oil prices and gas prices. And he told me that gas prices are going to go up pretty significantly. But what was interesting is he said that the United States has the ability to be completely dependent of United States oil. We have the ability to not rely on foreign oil, but partially because of an executive order that President Biden passed in 2021, we're not able to produce all that oil here in the United States, making us more dependent on foreign oil. President Biden wants to push the United States towards more green energy, to a more green environment, which is good. I mean, everybody should want to take care of the environment. The only problem with that is right now, we are still in an economy that's very heavily dependent on oil. So we're pushing more towards a green energy and green environment when we are still dependent on oil, which makes us more reliant on foreign oil. It's not like our oil consumption has drastically decreased. Our oil consumption is still there, but now we're just more reliant on foreign oil. And now, because Russia is one of the leading suppliers of energy to the world, we're more dependent on countries like Russia. And so everything going on between Russia and Ukraine now is creating disruptions in the energy market and the energy supply chain, but we in the United States are more dependent on foreign energy. That makes us more susceptible to these rising oil prices. At this point, you might be thinking something like, Jaspreet, can't we just have these oil companies in the United States start drilling for more oil right now? And yeah, we're starting to see some of that happen right now, except the problem with that is if we start drilling for more oil today, that doesn't mean the gas prices are going to go down tomorrow or next week or even next month. First, it's going to take time for an oil company to go research and find a new oil well, and then from the day they start drilling until the day we start really seeing the effects of this oil, it's going to take 6 to 12 months. So even if the United States started to drill for more oil right now, it would take months, if not a year, to see the effects of this new oil on our gas prices. But then the second issue has to do with the incentives of the oil companies. A number of oil company CEOs and executives have come out and they said that the current economic and regulatory environment doesn't make it very attractive for them to go out and start researching and investing to find more oil wells. Let me just read you a quote. This CNN article talked to a bunch of oil executives and financial executives, and what it said is that, quote, oil and gas companies do not want to drill more. These oil and gas companies are under pressure from the financial community to pay more dividends, do more share buybacks, instead of doing the drill baby drill, which is the way they would have done things 10 years ago. Part of the reason for that is that you have shareholders on Wall Street that own the shares of these oil companies that want to see a return on their money right now. And the other part of that is that you have a lot of pressure by the administration who want to remove oil subsidies, which make it harder for a business to operate if you want to drill oil, because that means you have higher costs because you have less tax breaks that you can take. So it starts to create a little bit of a dilemma because we want green energy, we just can't have it right now. Even Elon Musk came out and tweeted that we need to start drilling for more oil right now, that we need more oil right now, even though he's the CEO and one of the biggest proponents of electric cars in the world. But he's saying that we need more oil right now in order to combat this energy crisis because we want to move towards green energy, but we're just not there yet. So unless we see a resolution happen overseas soon, it looks like high gas prices might be here to stay. But here's what you gotta understand. While you and I can't control gas prices, we can't change what's going on in the economy, we can change what we do, because there are some things that you need to do right now to help combat these high gas prices. That way you can protect your wallet and make sure you come out of what's coming next a financial winner. First, stop counting your pennies, because at the end of the day, a penny saved is just a penny. Here's what happens for a lot of people. You see gas at $4 and you say, oh my gosh, $4, if I just drive a little bit further, I'm sure I could get gas for $3.80. So now you go out of your way, you waste your time, you drive even further to get your gas at $3.80, but how much money are you actually saving, and are you really valuing your time? So let's assume that you have a 15-gallon tank. If you have a 15-gallon tank and you fill up your gas tank at $4 a gallon, it is going to cost you $60. Now, I know it's a lot of money to fill up your gas tank for a 15-gallon tank, but if you drive an extra 15 minutes to get this $3.80 gas, now it's going to cost you not $60, it's going to cost you $57. You saved $3 by driving for an extra 15 minutes, taking on all the extra stress, going even further to save $3. Is your time worth $3? Is 15 minutes worth $3 of your time? If it is, that means you're valuing your time at $12 an hour. If you value your time at more than $12 an hour, it's not worth your time to go out and try to penny pinch and find the best deal when it comes to your gas. I'd rather you think a little bit bigger. I'm gonna tell you what that means in just a second, but instead of you trying to penny pinch with gas, be smarter with the money that you have. When you do this, you're just trying to pick up pennies in front of a steamroller. You're ignoring the dollars and you're trying to pick up the little pennies, the little scraps. That's why I want you to think a little bit bigger. The reason why this is so important is because, two, I need you to develop the growth mindset, and this becomes more important now than ever before. Let me diagram what this means. Here's how the finances look for most people. You have this income pie right here. Let me assume that you make $40,000 a year, and what most people are trying to do is they're trying to figure out, how can I squeeze the most amount of pennies out of my pie? So maybe right now your goal is to put aside 25% of your income. So 25% of what you make, which in this case is $10,000, into your savings and your investments. This is why you're willing to drive an extra 5 miles to save 20 cents on your gas, because what you're trying to do is you're trying to squeeze as many pennies as possible. If you're trying to become wealthy faster, you have this limited pie, so you're trying to just squeeze as many pennies out. That way now, instead of maybe putting aside 25%, you can put aside 27% of your income, so you have more money going towards your savings, you have more money going towards your investments. That way you can build your wealth faster. But this is a limited, scarce mindset, because in this mindset, you have a limited amount of money possible. But the reality is there's not a limited amount of money in the world. There's a lot of dollars out there. So what you want to do is you want to think about, how do you grow the pie? Instead of making $40,000 a year, trying to squeeze 27%, let's think about how you can make $400,000 $1,000 a year. Because now, if you can grow the pie and you're still only working to save and put aside that 25%, well, now 25% of $400,000 is $100,000. You have 10x how much money you're saving, you're 10x how much money you're investing, but you're still living off of just 75% of what you make. So you have the same mentality of putting money aside towards your investments. You have the same mentality of putting money aside for your savings, but now what you've done is you have this growth mindset of understanding how you can earn more money. That way you can grow the pie instead of just trying to be that penny pincher. The most accessible and passive way for you to grow your pie is just by investing your money, because now when you're investing your money, you're putting your money to work. That way your money can work to make you more money. That way it isn't just you working for your salary to get paid. Now you have your money working for you as well. This could mean investing your money in stocks, investing your money in real estate, investing your money in crypto, maybe investing your money in your own business. You're putting your money to work. That way your money can go out and attract you more money. If you want to learn more about how you can invest your money in stocks, we put together a free 1-hour lesson on how to invest your money in the stock market. This is in my Market Insiders company. It's an investing education app, and you can watch this lesson on how to invest your money in the stock market for free. I'll put the link to how you can watch the video down in the description below. Third, you can also create more income. The reality is we're entering a period where life is getting more expensive, gas is getting more expensive, food is getting more expensive, housing is getting more expensive, while wages are not keeping up. Not even close. Who knows how long we're going to be in this high inflationary environment. So instead of trying to rely on the government and instead of trying to rely on the Federal Reserve Bank to take care of you, I want you to take control of your own financial future, because this is not going away anytime soon. So it is more important than ever for you to start creating your own income. Maybe that means taking on a second job. Maybe that means working more hours. Maybe that means starting your own side hustle. Maybe that means starting your own business. But you have to take some action, because the reality is life is going to get more expensive. You don't want to be the one paying the price. So what does that mean? You need to learn how can you attract more dollars into your wallet. And the way that you can do that is by providing more value. You don't need to create the money. I know I said create more income, but you're not the one that's creating the money. The Fed is the one that's creating more money. They have printed trillions and trillions of dollars over the last few years. So what you want to do is you just want to take a small little piece of that and put that into your pocket. And the way that you can do that is by creating more value. The more value that you can provide, the more money that you can attract. Now, it is more accessible than ever to create your own side hustle, to start your own business, thanks to the internet. I mean, there are so many different companies out there that are looking for independent contractors that will allow you to work, and you can pick your own hours, you can pick your own schedule, you can pick your own times. And so this is another way for you to start earning more money, even if you don't have the entrepreneurial business mind, because starting a business is not for everybody, but you have to start earning more money if you want to be able to survive. That way you can keep putting money aside for your investments and your savings, because the reality is it is going to become extremely important for you to invest your money, especially in this high inflationary era, because you need to keep building that wealth, even though things keep getting more expensive. It is so crucial for you to do that. And if you don't create more income, then it's going to become even harder and harder for you to keep saving and investing your money, because your expenses are going to keep growing unless you shrink your lifestyle. Now, for a lot of people, they're not going to want to reduce their lifestyle. They're not going to want to downsize on their car or downsize on their home or stop going on vacations. So what do? You sacrifice your investments. You sacrifice your savings. I don't want you to do that. I want you to start earning more money. That way you can keep living your lifestyle and keep putting your money aside for your investments. And 4, I need you to understand how the system works. That way you can use the system to your advantage. This is very important for you to understand, because for most people, this is what happens with their finances. You earn money. You make money from your job, and then you pay taxes, and then you're going to spend money after all of that. This is where you're going to be paying money for your gas. But here's what happens now if you go out and create your own side hustle, if you go out and start your own business, if you become, the independent contractor where you create your own income. Now what you do is you get your income from whatever it is that you do. Then you pay your expenses for your business, your side hustle, whatever it takes to operate your business, side hustle, whatever it is that you're doing. And then you pay taxes on whatever is left. Now, these expenses in many cases can and will include your gas. So in this case, if you are running a business, you're running a side hustle, you have real estate investments where you have to drive from one place to another, well, now gas becomes an expense pre-tax, versus for the average person, gas is an expense after tax. So if gas prices go up and you understand the system and you know how to use the system to your advantage, well, higher gas prices at the end of the day mean a bigger tax break, a bigger tax deduction. Because now it's an expense that you take before you pay your taxes, while for everybody else, you pay your taxes and then you have just this much money to spend. And now you keep spending more and more of your after-tax dollars on your taxes, versus if you understand the system, you can use your gas as an expense pre-tax. Now, before you do this, make sure you talk to a tax professional in your area to understand how and when and why to do it, because I don't want you going out doing this and then realizing that you're doing something wrong. So talk to a tax professional, but if you understand the system, you can use the system to your advantage. That way, even if gas prices go up, it doesn't affect you as much as if you would if you're paying these higher gas prices after taxes. If you enjoyed this video, here's a video on the laws of money that I think you'll love and why I add it. If you want to watch our free lesson on how to invest your money in the stock market, you can do that by clicking this button below. Thank you for watching, and as always, keep hustling. I used to laugh and make fun of people that were staying at these expensive hotels. It's the insecurity that we have inside of us. I was insecure about the amount of money I had.